This is a typical ordinary level cash budget question where they start by giving you the opening balance sheet, showing you the assets and liabilities in capital at the start of the year, and then, as in this case, they give you the likely transactions over the next few months. Here it's a 5-month period. The question goes on to ask you to do a budgeted cash budget and a budgeted balance sheet. They could also ask you to do the final accounts, but in this case they've told you instead that the net profit for the period is 98,000. Let's look now at their budgeted cash receipts for the 5-month period. In this question, the only money coming into the firm will be the proceeds of their sales. So we see in January that we've got €44,000 coming in cash. That's not January's sales, that's December's sales, because the question tells us that all sales are on credit and are paid for 1 month after sale. Similarly, in February, we've got €80,000 coming in, and those are January's sales. So the money coming in each month is the money from the previous month's sales. We must just remember that the May sales of €100,000 haven't been received at all, and they'll be received in June, so that when it comes for us to do the balance sheet, we must remember that we're owed €100,000 for May's sales. So our debtors at the end of May will be €100,000. Our total receipts then would simply be the sum of what's only one figure in each case. Moving on now to our budgeted cash payments. Now our cash payments. Each month we pay for the previous month's credit purchases. So the 57,000 paid in January is paying for the opening creditors, the December purchases. Then in February we're paying 55,000, which is January's credit purchases, and so on for the other months except for the final month there, the 77,000. That 77,000 is made up of paying for the 62,000 worth of April's credit purchases, plus, as the question tells us, €15,000 in cash purchases in May. So 62 plus 15 explains the 77,000 payment for purchases in May. Remember, May's purchases were actually 70,000 credit purchases, 15,000 of which we've paid for in the month, so leaving 55,000 worth of May's purchases unpaid for. That will be our creditors at the end of May, and we'll pay for those, of course, in June. The question tells us that each month we pay €1,000 in rent. Well, it says €12,000 in rent per annum, payable monthly, so that's €1,000 a month. The question tells us we pay €5,000 in wages, and then that we're going to buy equipment in the month of May. That explains those figures. So totaling up our cash payments, we see January 63,000 and 61,000 in February, and so on through each of the 5 months. Looking at the overall situation for the 5 months, we see again that in January they plan to receive €44,000 in cash, and during that month they plan to spend 63,000. That explains our net cash row there of minus 19,000 for January. They will be overspending €19,000 in January. And they're starting January with 2,200. We got that figure from our opening balance sheet of cash in bank, 2,200. So if we overspend by 19,000 and we have 2,200 to begin with, we end the month with a closing cash of minus 16,800. Closing cash is always net cash plus opening cash, and that 16,800 is brought from January's closing cash through to February's opening cash. Carrying that reasoning through then for each of the 5 months and just concentrating on the last 3 lines of the cash budget, we'll see that our closing cash is always net cash plus opening cash. So when we move into February, we see we are receiving €19,000 more than we're spending. We started the month with 16,800 minus, so we'll end with 2,200, which we carry into March. Again, in March, we're receiving 11,000 more than we're spending, to which we add our 2,200, so that we close March with 13,200, and so on. Each month's closing cash being brought up to the following month's opening cash for each of the 5 months, not of course for the total figures at the end. For the end, we'll see that overall for the 5 months we're bringing in 31,000 more than we're going to spend, so our net cash for the whole period is 31,000. We started the 5 months period with the opening 2,200. Go back to the start of that row. So our closing cash is, as always, net cash 31,000 plus opening cash 2,200. So our closing cash we plan will be 33,200, and of course that will be our cash and bank figure for the balance sheet. Moving on then to that balance sheet, we'll see straight away that our cash and bank is the 33,200 that we've just calculated. But looking up at the fixed assets, we started with 240,000 and we've now added another 7,000 for equipment. Looking at the current assets, the stock of 18,800 was given to us. The €100,000 debtors, those are our May sales for which we haven't been paid yet. So our 3 current assets total 152,000, and our only current liability are our trade creditors. Remember, the trade creditors were May's credit purchases of 70,000 minus 15, 55,000. So those are our creditors, giving us a working capital of 97,000, our net current assets, so that our net assets are 344,000. Our capital, which we had from the start of the balance sheet, from the opening balance sheet, was 246,000, plus the net profit of 98,000 that we didn't have to calculate, but we were told, giving us a capital employed of 344,000. Although not requested, we've gone on to look at the budgeted trading and profit and loss account to double check that 98,000, and we find that in fact that's what we're getting, because the sales are our 435,000, which was given to us in the original question. Remember now, this is not the cash received from sales. This is the original January through to May sales figures, all on credit, added up 435,000. So they gave us that, less the cost of sales. Opening stock was given to us in the opening balance sheet of 16,800. Our purchases also given to us in the original question. Purchases, the 5 months credit purchases, add them all up, 309,000. Add them up, cost of goods for sale, closing stock 18,800. They told us that, so our cost of sales is 307,000, giving us a gross profit of 128,000. We've only got the 2 expenses, the 5 months rent at €1,000 a month and the 5 months wages at €5,000 a month, totaling 30,000. Now, in some questions they'll ask you to calculate depreciation as well, and we'd have to pay attention then to the fact that we had fixed assets to begin with for the whole 5 months, but then that we bought another fixed asset, equipment, just for the last month, and we'd only have a month's depreciation on it. Anyway, in this case, only 2 expenses totaling €30,000, giving us a net profit of 98,000.